Don't do it, guys. Don't place trades based on what you see here. Please consult your own financial advisors and do your own due diligence. All right, with that said, let's go. It is Tuesday, September 18th. Not a huge day. A couple events happened today. Basically flat on the portfolio, as you can see here. Not a lot of change from yesterday. Scrolling down, options are doing all right. This is a big one here. JD purchased it the other day, and I'm sorry, I saw the put the other day, and I got $18, and I'm already winning by 12. So um, I made $12 in one day by selling that. I'm gonna keep riding it. I'm not really that afraid of it dropping below 24.5 at this point. JD, that is. I think it's 25.87 is what it finished at. But the smart thing would be to sell it to rebuy the contract here and then resell another one for a further out date. But I'm not gonna do that. I'm gonna do the not smart decision. Other things we're seeing is that the yields of the 10-year Treasury continue to climb. They're at 30.5 right now, which is pretty high. And we talked about last time on my last recording, my last vlog, is that that really adds pressure to the emerging markets, the high rates. And as you can see, the dollar also climbed just a tiny bit today. And the proof of that, since these rates climbed, is look at this. My emerging market fund, all right, it went down 5.47%. You see this? 5.47%. That's a huge decline. That's a overall, that's just emerging market fund. It's crazy. So there are a lot of pressure here. We talked about a final flush out that I'm kind of waiting for. I still don't even think this is it. Might be more, but I'm not gonna sell this position because in just in case I'm wrong, I'm looking to acquire more of it. I'm not looking to trade it. All right, so this is what it looks like. 5-year chart on this fund. If it drops somewhere around here, around $10, I will start buying again and then maybe buy some more at 7. So this is a really good monthly dividend fund. Unfortunately, it's one of those I think that returns capital if we can't meet its dividend obligations. So I don't recommend it to anyone, even though I just told you I'd buy some. That doesn't mean that you should do it. It's not a smart idea, okay? Just don't do it. Don't do it, okay? All right, now what else? EXK went down just a tad. But it was enough to push the puts up 15%, which was a $65 swing. As you can see here, I would have been like 1765 if that didn't happen, something like that. 765. So at any rate, things I'm looking forward to happening. Oh, look, Apple inching a little bit. Oh, this is good. I really want Switch to go up, right? We talked about me wanting to hit that $12 mark so it can auto sell and I can get out of the darn trade. Um, what else is happening here? Uranium's up a little bit. That's good news. The URA puts looks like will expire at the end of the week, and I'm gonna collect my $2,400 back, and I get to keep the premium that I got for them. For them. Um, I forgot how much premium I'm collecting. Oh, here it is, 49 plus 6. So 55, collecting $55 for waiting a couple months on that $2,400 collateral. So doing good. I'm happy about that. So even though I'm not making really big gains, that's kind of the point of this portfolio is to be smart through option selling and have hedges and be a little bit diversified and have some. It's very resource heavy. Don't get me wrong, but I'm gonna be making a lot of steady gains, hopefully through the option play, which is taking up about a third of the portfolio at this point. Um, News on Rio Tinto. Why is this changing? Okay, so what else? Precious metals are up in the aftermarkets here, so I'm hoping to reverse that loss on the puts or that devaluation of the puts, of increase in valuation of the puts. Hoping to reverse it so I get less, negative equity. This number needs to shrink. It needs to shrink to zero by the time January comes in. So that would be a good trade for me. Okay, anything else that needs to be worth mentioned? Um, I am expecting things to continue as they have been expecting, as they have been going. Dollar staying strong, yields being up, emerging markets being down. Precious metals though not really caving in at this point. Theoretically, the theory goes like this, right? The theory goes, and the reason why metals usually travel with emerging markets because is that the high yields of the treasuries are considered like a no risk asset. So the high yields of the treasuries, the American bonds, they theoretically disincentivize people from holding precious metals because now you can actually get a return on your paper that's greater than inflation, right? But that's the key here. That's the caveat is greater than inflation. So if inflation is running hotter than the 3.5 or 3.05% that the 10 years running at, I mean, there's 0 point in you locking in that 3% yield for 10 years. Obviously, you can trade the bonds, but there's no point in doing that if you're going to be losing purchasing power, so you might as well buy gold. So if gold's not dropping, what it says is that some investors think that inflation is going to be higher in the upcoming 10 years than they're going to get in yield through the treasury. And so they would prefer owning something inert like gold that doesn't produce a yield, doesn't produce anything. It just maintains purchasing power. So defensive investors, they like to play that gold and bonds game. But at this point, if metals are not dropping, yields are climbing, that means the appetite and metals are not dropping through the increase in the dollar, right? So the dollar is getting stronger. Metals are supposed to be dropping, but they're really not. They're kind of holding steady. They had that big drop earlier, but at this point in the last week or two. So they might be catching a bid here. I mean, I don't know. I was expecting them to flush out a little bit further like the emerging markets are doing right now, but they're holding. We'll see what happens. I'm very curious. Um, I'm still holding my positions. I'm not changing anything. Running almost zero hedge related to the market, but the resource are kind of acts as a hedge sometimes, like these precious metals. They're so low right now. I don't anticipate them going even lower if the market goes down um, or anything like that. So I'm just gonna do my options play. I'm sticking to my long-term bets. And I have some diversification here, gas, utilities, foreign utilities, shipping company. This is just US manufacturing, um, oil, emerging market bonds down here. I even have a tiny bit of tech. So uranium, gold, silver, emerging market fund, dividend fund, US company. I think they hold some debt. I'm not, yeah. And some real estate funds. So pretty diversified. I don't expect this portfolio to go down to zero ever. Ever. With that said, I'm looking forward to tomorrow. All right, peace out.